Good afternoon, everyone. Thanks again for taking time to join us today. Delighted to welcome you to today's panel discussion on the recent US election results. So my name is Yacine, and I'm a senior trader here at SDM for crypto OTC desk, really catered to institutional clients. So this election has been pivotal. With Donald Trump elected as president, we are on the brink of what could be significant shifts in policy that may spur the growth of the crypto sector. Given that we're deeply embedded in the trading of digital assets, understanding these changes is obviously crucial, not only for trading, but also for advising our clients effectively. Today, we're joined by a distinguished panel of experts who will dive into the implications of the US elections on financial regulations, the cryptocurrency market as a whole, and the broader economic landscape. So we'll explore what President Trump's administration could mean for regulation, innovation in crypto, and how traders, investors, and institutions in general might navigate this evolving market. The goal today is really to offer a deeper understanding of what lies ahead. So it's now time to introduce our panelists. Let's start with Tim.
Good afternoon, everybody. Tim Burgess here. I'm the CEO of WealthAgile. We call it Smart Crypto Made Easy. We've built an index portfolio app that allows investors to get access to the crypto markets with professional index portfolios. And my background actually is more TradFi. I was a former portfolio manager, hedge fund manager. So I bring that to the table. And looking forward to a good discussion.
Thank you. And Noah.
Hi, I'm Noah. It's great to meet everybody. So I work on the investment team at Theia. We are a liquid token fund investing in on-chain financial primitives. Prior to Theia, I'd spent my relatively short career investing and trading in cryptocurrencies.
Okay, perfect. Thank you, everyone. Okay, I think everyone's excited to jump in, so let's do it. Let's start by getting just a high-level reaction from everyone here. Who did you think was going to win, and were you surprised with the result at all? Let's start with you, Noah.
So I generally believe that Polymarket and like the general prediction markets had a relatively inefficient trading period over the past few weeks. So I think the odds at 65% in favor of Trump were kind of generally in line with what I anticipated. So I guess mildly surprised that Trump won, but in general, I think that was more likely than not. I'm not sure if the House of Representatives, all the votes have come in yet, but I would say I was a bit more surprised by the red sweep. So I think it was much less likely as opposed to just a Trump win and potentially a split legislative.
What do you think, Tim?
What I was thinking was that the Polymarket was actually being manipulated by a few big traders, and the odds were skewed. But I thought it was going to be a toss-up, but like the polls said a toss-up. The Economist had it at 55% Harris in their most recent model. So I wasn't surprised. I thought it was going to be basically a landslide by one or the other, because I think that the polls would have it wrong. But what I'd like to point out is that actually Polymarket was actually right. And I think the general point you can make is that markets are right. Markets tend to lead. I used to be like a trend following investor, right? So markets lead, and markets were right, and all the pundits, all the polls, and everything else were wrong. So basically, markets prevail.
Yeah, I think you're absolutely true. I think that's the number one thing we learn in trading, right? The market is always right. Do not fight it.
Don't fight the tape.
Don't fight the tape, exactly. I personally wasn't very surprised. I think there was a strong momentum for change in the country. I don't think it's necessarily that people wanted Trump or didn't want Harris, but they wanted change, and that was for sure. And I think that Trump provided a lot more clear policies, and I think that Kamala Harris really was reluctant to commit to clear policy positions, and that really backfired, right? And it kind of created an impression of evasiveness, which really alienated voters. So that really didn't help. But yeah, overall, it's really interesting to see, especially how Kamala Harris has really underperformed Biden compared to the 2020 elections. And according to CNN, she hasn't outperformed Biden in any state at all. So not only was this clear shift in sentiment, it's really a market that was very decisive of what they wanted. So I thought that was the most interesting thing. So how do you think the market's immediate reaction to the election results has been? Let's start with you, Tim.
I think it's very, very much expected. I mean, it was already priced in predominantly before the election, and then it came off a little bit because Harris had that one Iowa poll that showed that she was winning in Iowa. So the markets came back in, but as soon as it reasserted itself, you basically see higher interest rates because of Trump policies on tariffs and so on, and you saw the big move into small caps with the Russell up 5%. So they think it's better for entrepreneurs, obviously, and you took the uncertainty away. So obviously the VIX came in hugely because they thought it might be a hung election, right? No hung election, no uncertainty. They like the entrepreneurial spirits, market moving up, crypto obviously moving forward, and better regulation for crypto. So I think it's sort of expected.
I agree with the idea of more certainty. I mean, that's why the VIX dropped, I think, over 20%. It's interesting to see the 10-year yields, shoot higher. But I mean, that's not a surprise, right? We've seen the yield kind of follow Trump's odds because of his, potential tariffs that he might place, whether it's on China or the rest of Europe. I think that might potentially reignite fears of inflation rates. So
it's also because of deficit spending.
Yes, definitely.
Last time he was in power, he added $7.5 trillion to the debt. So they think that he's going to do that again, and that's going to create higher interest rates.
Yeah, that's true. What do you think, Noah?
Yeah, so I generally agree with both you guys. I felt that the moves all made sense relative to Trump's policies and increasing certainty around him being elected. I think going into the election, option markets were implying greater than 5, probably less than 10% move just based on implied volatility. So I think that things moved directionally how you'd expect. And then I guess specific to the liquid token market, we saw tokens that are more in regulatory crosshairs perform well, and we also saw tokens that are associated with volume perform well. So exchanges, which I think make a lot more sense than, for example, lending protocols, just on the basis of speculative interest, driving more flows as opposed to higher interest rates. So I'd say the crypto specific price changes also were relatively in line with what you would expect for a Trump presidency.
That's interesting. Speaking of that, what this question is mostly for you, Noah. What tokens or industry segments do you think will be the most affected with Trump as president?
So I think that decentralized exchanges are one general market segment that is well positioned in the current regime. One, there was regulatory uncertainty around whether they'd be potential broker-dealers. And so, for example, Uniswap has a Wells notice. They're being investigated, not necessarily specific to that. But in general, there was some overhang associated with regulation. So I think that is likely to be solved over the next few years. And then additionally, I think most crypto traders believe that Trump winning is likely to create more speculative interest in the market. And so when you're thinking about businesses that are going to benefit from more speculation, it's generally ones that are facilitating trading. So DEXs being kind of like the underlying infrastructure, and then maybe a layer higher, you have DeFi front ends that facilitate flows into decentralized exchanges, but because they're more directly connected to the users, they have the ability to charge higher fees than decentralized exchanges. So I don't know, something like Pump.Fund, for example, is well positioned to capitalize on this speculative interest.
Yeah, I think that makes sense. DeFi, DEX should definitely flourish under a crypto-friendly administration because, I mean, we've never really had clear crypto regulations for that segment of the markets. I think ETH could also be part of that list. I think ETH has kind of been, no one has really determined its stance, at least with regulators, right? Whether security, commodity, it's not as clear as Bitcoin. So I think that could also help ETH. But Tim, what do you think? What segment do you think in the traditional financial market or the macro landscape as a whole would be the most impacted with Trump as a president?
Well, like I said, I think you've already seen it in the small caps, right? Moving forward strongly. So small caps in traditional finance. I think also not so much for the capital markets, but for the venture markets, and of course, and this could help WealthAgile a lot, is just a stronger flow of money into startups and into crypto with certainty. Because I think a lot of the venture capitalists in the United States have been on the sidelines in crypto because they don't know, because the regulation is so opaque. Now you get some clarity in the regulations, they will start coming in. And also, that's a good point that Noah made on the DEX. If the DEX market is just left alone and doesn't suffer the same regulatory nightmare that the centralized market has suffered, that'll allow that market to flourish a lot more. And we're actually looking at that. We're actually looking at distributing through a DEX now for that reason. We've been looking at that for a while, but that's good news. And so any investments in that realm, as you mentioned, are definitely going to benefit.
Yeah, I think we can all agree with that. So obviously both candidates have made an effort to appeal to the crypto industry. But now that the dust has settled, do you think this new administration will implement positive crypto legislation? I mean, Trump has been pretty vocal that he might take the first 100 days in office to propose some rules. Do you see him collaborating effectively with the SEC and the CFTC? Do you think it'll be, he will implement these rules as promised? Do you think it's going to take longer than expected? What are your thoughts? Starting with you, Tim.
I mean, I think he'll fall through on the first thing. He loves firing people, so he's going to fire Gensler. That's for sure. That guy's gone. I can't stand that guy anyway, so I'm happy with that. And then it's just a question of who he brings in. Like I don't think he's really said who he's going to. I think there were a couple guys that he mentioned that were apparently in Congress now, or maybe perhaps I forget their names, that could be favorable to crypto regulation. But then it really depends on what they do. It always takes a while. It's still a complicated space. Is it a commodity? Is the token a commodity? Is it a security? All this debate on that. If they could just figure, I'd actually be happier if it was neither. They just called it a digital asset or something. But anyway, really, I don't know. Maybe there's smarter. I'm sure there's smarter policy people that might have a better idea on this, but I don't have the answer as to how it'll be implemented.
What do you think, Noah?
So I think there's a few things. In general, I do think that there will be a fair amount of implementation of crypto policy in the first 2 years of Trump's presidency. But I think one of the large drivers, in addition to Trump being president, is the fact that the Republicans control legislative, as that has generally been the main blocker. So I think that there will be the ability to push through policy that is partisan to the Republican Party. In addition, there's a lot of funding from super PACs that are crypto driven. I think the majority or the largest industry that was donating to Trump is crypto. And so presumably that will have an impact as far as the discretionary appointments that Trump makes for various positions. And additionally, like, for example, the head of Trump's transition team is Howard Lutnick, the CEO of Cantor Fitzgerald, I believe, right, which custodies $100 billion of treasuries on behalf of Tether. So naturally, they have an interest in making sure that stablecoin legislation is pushed through. And then I guess just in general, Circle and Coinbase have been some of the largest lobbyists within the U.S. And have primarily focused on legislation pertaining to their businesses. So in the case of Coinbase, you had the market structure bill that had been worked on for the past several years. And in the case of Circle, you had the stablecoin legislation bill. There's a potential that both bills have updates now that they no longer have to make concessions to the Democrats in order to attempt to get these bills passed. But certainly both these bills are the most likely to go through legislative and be pushed through within the first 2 years. After that, I don't really have a great sense, but I definitely think that we'll get clarity around stable coins and their role within the US and centralized exchanges.
One factor actually in this, though, is that the House has not been determined yet. It could be, if it's a Democratic House, they will have influence. And we don't
I agree. I should caveat with that. I looked at Polymarket earlier this morning and saw it at 98%, so it's definitely not a certainty, but I'm generally leaning towards that being the outcome. But agreed, should caveat with that.
I thought, so Polymarket has a 98% certainty?
As of this morning.
Okay, well, they've been right so far.
That's very true. And I agree with what you said, Noah. I think that centralized exchanges and stable coins are kind of like the easy win that, they could kind of get that going as soon as possible. I think we discussed, there's been some incidents in the recent past regarding bad actors in crypto. And I think that has, been somewhat related to centralized exchange, whether it's like proof of reserves and, things of the sort. So I think that's, and that can really protect consumers, right? He does have that mandate to try and protect consumers from these bad actors. So I think that's definitely something they could do, whether it's stablecoin regulation and a little more regulation over the centralized exchanges. So yeah, definitely agree with that. So Trump definitely mentioned that, he wants to fire Gensler, create a BTC strategic reserve, clarify crypto rules, embrace stablecoins, and block a CBDC. So what do you think? What do you think of these initiatives in general, and which do you believe will have the biggest impact on the market? Starting with you, Noah.
So I think some of these are more likely than others, and I think in general I hesitate to take many of the things that Trump says at face value, given that in a lot of cases during elections, there tends to be a fair amount of posturing around policies. So for example, the Bitcoin strategic reserve, I have no clue whether that's going to happen. It doesn't seem like it's probably the immediate priority. I would say with almost certainty, Gary Gensler will no longer have his role. So putting aside like which ones are more likely than not, I think that the Bitcoin strategic reserve would probably be most impactful, although most unlikely, in that if the US starts to accumulate Bitcoin, it creates a conversation that many other countries have to start having around whether they should be having similar policies. So I think that one has a lot of like long-term implications. In general, I think that stablecoins are the killer use case for most people and how they potentially interact with crypto, at least today. And so I think that legislation around stablecoins, as well as not pushing through a CBDC, is probably most likely within this presidency and most impactful.
Yeah, that makes sense. How about you, Tim? What do you think?
As I said, I agree with everybody that Gensler's gone, which
for sure.
is refreshing. I think stable coins are also very important. I think they'll likely get that done. I mean, they'll get that done, and that'll provide like a solid mode of exchange for digital assets. In terms of the strategic reserve, I think that's very unlikely, because that impacts the U.S. dollar as a reserve currency. So unless he's running unless Trump ends up firing the head of the Federal Reserve as well and becoming head of the Federal Reserve, or he's talked about controlling it. So that actually came up in Bloomberg this morning. I think he just probably will get more influence, which is by the way historically been a disaster If you look in history, anytime like a president gets involved in the Federal Reserve, it's a disaster because he's obviously biased. So I don't see that happening. And as I said, yeah, I think it's the most important thing is just somebody a new head of the SEC coming in and laying a proper rule book that people can follow. So I think that, and we don't know how that's going to go yet. That's
definitely. Yeah, I agree with you guys. I think clarifying the crypto rules and embracing stable coins is really up there. The idea of having BTC strategic reserve, we can all, agree that it's a pretty big deal. Might be a little tough to implement, but hey, listen, Trump has been pretty active in his first days as president, right? So we'll see what he can get done in the first 100 days. In terms of, I want to kind of move the conversation towards M&A. So we've noticed a lot of horizontal integration, for example, a lot of mergers, acquisitions with other companies that operate at the same level in the industry. For example, large cap miners have been merging or acquiring the smaller players to increase efficiency or gain more market share. Do you believe we're entering a market environment where we're finally going to see and witness TradFi players that are interested in acquiring and merging with crypto native firms to get into the industry? So for example, a PayPal acquiring a stablecoin issue or something like that, or maybe a big bank acquiring a trading desk. I guess we can start with you, Tim.
I think that's logical. Actually, I think consolidation in the whole industry is logical. Look at the Canadian exchanges. They're all these tiny Canadian exchanges, way too small for the size of the market in Canada. I think there'll be more consolidation there, and actually the same in the United States and the same globally. There's so many. Look how many exchanges there are relative to what you see in TradFi, right? It's crazy, right? It's the Wild West. So there's going to be, that makes sense. There'll definitely be consolidation amongst the exchanges. In terms of the TradFi players coming in, yeah, I think they ultimately will. I mean, you've already seen them come in on the ETF side with BlackRock, right? I think they will come in, but they'll look for the bigger player. They'll consolidate the bigger players. Maybe one of them buys Coinbase, for example, because the bigger TradFi players, they don't want it. They're not going to deal with the smaller companies. So that's how I see it. But there also will be, just like in terms of if you get down to the venture companies, there'll be a lot of consolidation there as well, as some of the bigger players pull some of those companies in. So it's all good. M&A activity is great for business.
I mean, Coinbase's market cap is around $60 billion. It's really not that much compared to Goldman Sachs that wants to enter the game. So
it's puny, like it's 60 billion, but that's still puny. What's Goldman Sachs? I don't even know off the top of my head. What is it? 200.
Goldman Sachs should be around 500 billion. Not sure. 230 billion.
Yeah, that's what I thought.
Yeah.
So they can pull Coinbase. If they want Coinbase, they can just pull it in.
Yeah, or maybe, yeah, exactly. Or maybe, NVIDIA acquiring a miner. They're 3-point-something trillion. So it's possible. It's possible. But
NVIDIA can acquire anything it wants.
Yeah, exactly. By the whole S&P 500 at this point.
Biggest public company in the world now. It's bigger than Apple.
Yeah, they just surpassed Apple a couple of days ago, actually. Yeah. Yeah. What do you think, Noah, regarding this? The rise of consolidation and kind of TradFi players entering the crypto worlds by with some M&A.
Yeah, I agree with everything that's been said. I think that there's a lot of different components, even putting aside this election, that make consolidation of our industry likely. Putting aside, I'll get to the traditional financial players, but when you look at the current market structure, to Tim's point, it's relatively fractured compared to traditional markets that are somewhat similar. And there are a number of reasons for this, but as of now, many of these companies are cash flow negative, and the venture market is no longer in as good of a place as it has been in 2021. And so a lot of these companies are relatively low on runway or required to continuously tap primary markets to raise. There's a lot of redundancy in these companies that is unnecessary, that probably benefits from mergers. So I think M&A makes sense just from the perspective of getting to a better margin. And then as far as the traditional players coming in, I think one of the potential blockers for traditional players coming in is the lack of regulatory clarity and potentially acquiring or merging with a business that creates additional risk for the traditional players' core businesses. And given that historically crypto hasn't been a massive revenue opportunity for these businesses, there hasn't been the impetus for them to start acquiring. And so I think stable coins, whether it's issuers or service providers, those make a lot of sense. So we saw the recent Stripe and Bridge acquisition. And the other one, I think, is on-chain transfer agents. So players like Securitize that already have like traditional players listing their like tokenized funds via these transfer agents. I think that's also a natural potential acquisition target.
Yeah, I absolutely agree with you. We're actually going to talk about that in a bit, but yeah, I just think in general, Trump as a president is not enough for the likes of these big U.S. banks to kind of enter and start acquiring crypto companies. But once we really clarify these crypto rules, and it's going to take time, it's going to take over a year, I think that it's very normal, natural to kind of see a lot more consolidation in the industry. I think these TradFi firms are definitely interested in crypto. I think they're just missing, I guess, that catalyst moment where really the perception is a lot more positive and where the regulatory outlook is a lot more clear. So I could definitely see that happening. Just a matter of time. So definitely think that's going to be the next wave to really bring crypto to global adoption.
I think you hit the nail on the head that the banks, they won't come in until there's regulatory clarity because
Exactly.
they don't want to take that risk. They don't need that.
And even though, for example, a lot of bank CEOs are against crypto, and I don't blame them. I mean, it is a threat to their business model. They're still investing in blockchain initiatives. They're investing in these crypto startups, right? It's not like they're not entering the crypto market in any way, shape, or form. They're just not really entering it in a more the capital markets perspective, especially in trading, because that's where it's a little kind of in a gray zone, right? But they're seeing the volume going through. They're seeing the opportunity. BlackRock is smelling it. Now everyone's smelling it, and I think it's just a matter of time for them to kind of want a piece of the pie.
With the exception of the Canadian banks, who were absolutely nowhere.
Canadian banks is a different story. They're not really run the same. They're technically one bank when you really think about it. But it's that's another topic of discussion. It'll be a little harder for them to kind of enter. I think after a lot of G7 countries really open up, I think Canada would kind of follow suit, but it's going to take time. So continuing with the impact to the TradFi industry, will U.S. banks be more open to accept crypto clients for banking services? Do you see U.S. banks engaging in more tokenization initiatives? How will this administration in general impact the perception and investments from TradFi to the crypto industry? Starting with you, Noah.
So I think there's an immediate positive impact for crypto and banking. Under the Biden administration, you had this unofficial choke point or Operation Choke Point 2.0, where a lot of venture-backed startups that had crypto tangential businesses were offboarded from banks around the time that Silvergate and SVB were having their troubles. And a lot of that policy was top down from people that Biden had put into office after he was made president, and carried out by the House of Representatives, primarily Sherrod Brown of Ohio, who has lost his position. So I think there's a number of reasons to suggest that a lot of the players that were responsible for suppressing crypto activity in banks are gone. So that probably poses less of a risk. And then as far as banks getting involved, I would say the most immediate steps really will just be accepting capital from venture-backed businesses that touch crypto. Because historically, or for the past couple of years, all these players have had to find neobanks that have banks underneath, like Mercury and players like that in order to get banking solutions. And then specifically to investments and other interactions from banks within crypto, I think banks are naturally slower moving than private equity and credit funds. So it doesn't surprise me to see players like KKR or Apollo being a bit more aggressive, and then to a lesser extent, ETF issuers and structured product issuers getting more aggressive. I think that banks are in a good position to implement stablecoin policies in some form or another, as far as launching stablecoins or accepting and facilitating transfers of stablecoins. And I think that will come after legislation that is probably pushed through over the next couple of years. And then lastly, there's probably a case to be made that banks will get involved in the exchange of tokenized assets. But I think the opportunity has to be viable as far as like market size. And today it's not quite there. The total addressable market long term probably grows, but serviceable addressable market is relatively limited. So I think there is kind of a chicken and egg problem of showing a large enough revenue opportunity to justify certain additional like crypto business lines being created by banks.
What do you think, Tim?
This is not really an area that I have a tremendous amount of expertise, but I'll just say I've talked to, on behalf of WealthAgile, I've talked to a few U.S. banks, because ultimately we're going to need a U.S. or a global bank for our operations. So, and they sort of talk to you, but they don't really want to do business. That was my impression, and I'm sure it was just like Noel alluded to. Operation Choke Point 2. Obviously, they're just too nervous to get involved in crypto. So that should change. Obviously, that's going to change. They're going to open up and deal with crypto companies. In terms of tokenization, yeah, I really don't know. I don't really, I really can't comment on that. So
yeah, I think regarding banking, it's been kind of shaky, especially for USD. We always have a ton of crypto-friendly banks here and there around the world, but in the market, when it's a couple USD banks go down for the crypto industry, so that has definitely hindered the growth, and I think that's going to change, right? I think, for example, Customers Bank was, I think, reached out to on behalf of, I guess, regulators to kind of wind down the crypto operation, so they have to kick out a ton of crypto clients. That has occurred with other banks as well. That should change in the near future. Once again, it's going to take time. I think we can all agree that clarifying crypto rules and actually implementing them is definitely going to be a lengthy process. It won't happen, on the day of inauguration. And yeah, regarding tokenization, I think it's a trend that's growing. There's no doubt that I've always thought that, blockchain projects like tokenization are definitely some segments of the market that I think banks have to look into. I think it would make their operations a lot more efficient, and they're realizing that more and more. There's a lot more pilot projects taking place regarding how to deal with margin requirements on behalf of clients, or just how to kind of make their whole operations a little smoother on the back end. So I think it's going to happen more and more. I think BlackRock has really led the way regarding, first of all, the ETFs were definitely a big deal, but I think they're doing a lot on the back end regarding tokenization. I think it's just a matter of time until people kind of smell the opportunity and want to get into it.
Just to add on there, I fully agree, and I think you've seen the walled garden approach as being an initial step for many banks, in that they cannot touch public blockchains or do not feel comfortable touching public blockchains, but would like to experiment with these technologies such that when they feel comfortable, they understand how to roll out this platform. And so for like the example of JP Morgan Chase, they've been running JPM Onyx, their permission blockchain that is essentially a fork of Ethereum, for now, 8 years or so. And like the total amount of volume that's been settled internally on it is quite substantial. And over the past couple of years, they've been doing pilots that are external settlements via their blockchain as well. And I will say, many members of the JPM Onyx team, when you speak to them, are open with the idea that long-term they'd like to have this all facilitated on public blockchains. It's just a question of when as opposed to if.
Yeah, that's a good point. It's pretty ironic how JP Morgan's investing a lot in blockchain initiatives while its CEO was very against the cryptocurrency industry since day one. Yeah.
That is funny. It's ironic. Yeah, he's totally against it, but in the background, guys, just keep working on this. This is a great business.
Yeah, those are kind of awkward meetings there. I'm sure some people got a little heat in the beginning to bring up those initiatives.
What about token issuance? Did you want to touch on that in the United States?
Yeah, sure. We could talk about it. What do you have in mind?
I was just going to say that's potentially a huge market if they can figure out the regulation. And right now, like that's one reason why we haven't issued a token is it's a regulatory hot potato, right? All of a sudden, if you're a Canadian or U.S. company and you've issued a token and you haven't issued it through BVI or some offshore jurisdiction, it's a hot potato because is it a security? Can you sell it into the U.S. and there's you need a bank of lawyers to issue one. So to get that organized, so you can issue a token in the United States, that would be a massive business. Noah, what do you think?
Yeah, I agree with you. I think the majority of companies and protocols that we've invested in that have tokens, the team is completely based outside of the US. And that trend of, I would say 4 years ago, the majority of teams that people were investing in used to be in the US and issuing tokens from the US. And so certainly the regulatory or the lack of clarity around regulation and step up of enforcement has kind of shifted efforts outside of the US to launch tokens. I think the only other thing that I'd add there is that while I imagine that a framework for launching tokens on public blockchains is likely to eventually come into regulatory scope, it's unclear whether it will happen in the first 2 years of Trump's presidency as opposed to back half. And then also the problems around solving for commodity versus security or defining exactly what a token isn't obvious how to solve, because in many cases, when we speak to teams that are launching tokens, there's divergence between what the team ascribes as the value of their token. Some believe that it is almost like tokenized equity for their company without legal rights, given the lack of regulatory clarity, and some believe that these tokens will serve as utility models that somehow improve the underlying product. And so from that perspective, you kind of have a divergence of what the preferred regulatory pathway would be for these various token issuers. So I think it's a complex topic that will have to be solved, but it's unclear to me exactly how it is solved.
Yeah, because it's so complex, it's going to take time, unfortunately, to solve.
Yeah, that's true. So we have a question here from one of our viewers. What are your price predictions for BTC to year end and 2025? Who wants to tackle this?
I'll take a shot at it, but it's just just throwing out numbers. Where is BTC right now? Is it 74,000?
Yeah, 75.
Yeah, 74.7. Yeah, call it 75, sure.
I don't have the chart in front of me, but I think it's coming out of something called a cup and handle pattern, and I think the measurement would be 100,000 from that, at least 100,000 from this breakout. So I'll say it definitely gets to 100,000. In terms of timing, always hard to predict. I'll say it gets to 85,000 by year end, and I'll say it gets to 100,000 next year, 100,000 plus next year.
Okay, what do you think, Noah?
Yeah, I agree. It's very, I think it's likely to finish the year higher than current pricing, and we have consolidated for 6+ months after going on a relatively strong run on the back of the ETF. And it does feel like the Trump presidency is a meaningful catalyst for price performance. So I can't say exactly how high it will go and whether that's what the probability of that is, but I do think that 100K over the next 3 or so months is definitely on the table.
Yeah, of course. We're just shooting, price targets here. I mean, I can give my own just for full clarity, not speaking on behalf of, the company here. This is my own personal price targets. I personally think it's going to be 85 to 90K by year end and between 125 to 150 next year. So we'll see if that can come into play. I think that, when you look at the growth rate, it pretty much doubles almost every year. Then you have, a lot more clear regulations. You're going to have a lot more publicly traded companies that are going to purchase more BTC in the open markets. You're going to have a lot more companies that want to implement a macro strategy of adding BTC in the reserves. So I think that's you add all that, and especially when we're talking about these institutional players, they're not trading your small size. They're coming in with big amounts. For now, they've only purchased somewhat small amounts of, call it 50 million here and there or 100 millions, but you're definitely going to get some big companies that are going to invest over $1 billion. And I think that's just we might have a supply issue here where prices just don't have the choice of just going higher based on the amount of demand coming through. So we'll see what takes place in the next few months.
The thing I would add actually is the crypto market has totally changed, right? Historically, it was only a retail market, right? Just retail involvement.
Yes, exactly.
Now with the institutional involvement,
that's a good point.
Huge base for the market, and also the retail market really hasn't participated. They haven't been there. Like in TradFi, you guys likely know this, but in TradFi, bull markets are always led by institutions first. Retail comes in later, and usually retail gets slaughtered when the market corrects at the end. That's traditionally what happens in all market cycles. So I don't think you've seen retail come in to this market yet. So I think there's lots of room.
Yeah, absolutely. You're right. I mean, even recently, based on current price action, retail activity has finally regained, I think, the levels of back in March this year. It took a while, but I think really institutions have really been, I think institutions are definitely going to be the source of the opportunity. And that's the main reason as to why I think I'm just very bullish in the next couple of years. We've really only had the retail markets, and that was enough to bring the crypto market to where it's at right now. And I think you add, you add some of the institutional flow, and for me, there's no doubt that we're going much higher. It's just a matter of time. And you add regulations to that, then it's off to the races.
You know, in traditional markets that institutions are at least 80% of the market, if not more. So,
exactly.
So it's a totally different market now.
Yeah. And I mean, a lot of the institutions that have kind of dabbled into crypto this year were really executing these basis trades, right? Where they were just buying spots, shorting futures. Not a lot of them took actually make a long direction on Bitcoin, right? So once they really start doing that, I think it's going to have a massive impact. But I think we can all agree that institutions coming in the game is definitely
they just allocate. They just allocate 1%. Like you've got companies like the big funds like Fidelity or whoever allocate 1% to crypto. It's enormous, right?
That's enough, exactly. I mean, recently we heard that British pension fund that's allocating, I think, 3%. It's a small fund of 50 million pounds, I believe.
That's
but
tiny.
It's still something. Yeah, it's tiny, but it's something. I think it's very it's very telling in the industry. I think a lot more pension funds and large institutions are definitely going to consider getting it as well. Just a matter of time.
I don't think the Canadian pension funds, for example, have allocation to crypto. I could be wrong, but I don't think so.
Did they not? I think, didn't they lose a bit of money from the FTX fiasco?
Yeah, they invested in FTX, but do they have actually allocations to tokens?
No, they don't. They don't, but I just think that kind of lasts.
They got burned. They wrote
exactly.
up 100 million or something.
Exactly. So I think so that kind of left a massive taste in their mouth, and it's not really they might not be excited to jump in right away. At some point, I think it's inevitable that they will, but it just might take a little bit of time.
Yeah.
So how do you guys think Jerome Powell, for example, in the current administration, have managed the Federal Reserve in general? Like, what are some changes you want to see come from a new chair? Let's start with you, Tim.
I think he's done a phenomenal job. I mean, he came out of the pandemic. He had an easy monetary policy coming out of the pandemic, allowed the U.S. economy to come out of the pandemic, and then he slowly put the brakes on, increased interest rates to I guess about 5%. Slowly put the brakes on. Economy still sustained its momentum, and he waited and waited and waited as the economy continued to. You had one of the strongest economies in the world. You had the strongest economy in the world in the United States. It came out of the pandemic. It's way stronger than China. China's like a basket case compared to the U.S. I think he did a phenomenal job. Like if I was, and of course Trump just likes to fire people, but that's a guy who should stay in the job, and they shouldn't bother him. Just let him do his job. He's slow now. He's taking, he started to cut rates just enough to avoid a recession. They might not even have a risk. It might be just very mild. So I don't know. I'm a big fan. That's all I have to say.
Yeah. What do you think, Noah?
I generally agree. I think the only thing that I would fault the Fed on is the speed at which they reacted to the increase of inflation in 2021. It did feel like there was 3 to 6 months where the data was very clearly accelerating, and they were relatively sanguine as far as like the messaging that they're giving the market. But other than that, I think they've dealt with a relatively unprecedented environment well, and I was surprised at the kind of soft landing that it seems that the U.S. economy is having. The only thing that I'd add, though, is that like the role of the Fed is probably decreasing in relevance within the context of economic policy within the U.S. relative to the Treasury, just given how large the deficit is and how much of the debt in the U.S. and the private sectors is fixed rate as opposed to floating, whereas in like Canada, for example, it's a lot more floating. So I think like the Fed has an important role, but slowly and surely, I think the Treasury is gaining much more dominance over the U.S.'s economic policy.
That's actually a good point about the Treasury. That's a good point. The U.S. is basically in a debt spiral. They got serious problems, unless Musk can do what he says he can do, I guess, and take $2 trillion out of spending, which I think is it sounds like a pipe dream to me, but that's what he said he could do.
Yeah, that's going to be tough, but hey, let's never doubt what Elon Musk can or can't do. In terms of the Fed, I don't know. I personally I'm always in the belief that the Fed is always way too slow to react. This idea that inflation was transitory was nonsense. Letting the market rip that high without raising rates, in my opinion, was a big mistake. So I think they kind of had a big get big impacts regarding inflation. Forget about Ukraine, Russia, what happened. Obviously, that kind of led to another mess. But there's no doubt they could have acted way sooner to raise rates, even a little bit, 25 bits here and there every 2 meetings. They could have done a better job. So yeah, but that's like kind of the nature of the Fed. They have a history, a track record of always acting late. So it's not new to me. Yeah.
Also, like inflation is a global phenomenon. The U.S. is not an outlier on inflation.
Yeah, that's kind of unfortunate that like a lot of political voters were kind of blaming the Democrats regarding inflation. It's not really their fault. You can't blame them. I mean, COVID took place, and then Russia, Ukraine had a big impact as well. You can't blame Joe Biden for all the inflation mess that has taken place all over the world.
But the voters do anyway. That's how it works.
Yeah, people like people just like simple answers. That's it. They don't want to do a lot of research, but yeah. We have a couple of questions from our viewers here. So we said that 80% of TradFi markets are really dominated by institutions. What do you think the rate would be in crypto markets in terms of their percentage of institutions? Let's start with you, Tim.
I'd be guessing. I don't have empirical information on this, but I'm going to say their participation now is probably it's probably a lot higher than people realize. I was going to say it was only like 10 or 20%. It's probably more like about 70% now. But maybe Noah, since he's a fund manager, has better information on this. I'll say 70.
Yeah, I actually agree on 70%. I think that in 2021, like volumes generally were kind of like 30% institutional or less, whereas now you generally see it 70% plus. And part of that might be the fact that like we don't have as much retail participation in token markets as we did a few years ago, and so maybe that changes if the market continues to perform well. But yeah, I would say that institutions have become not necessarily like traditional financial institutions, but like crypto native institutions have become a very dominant percentage of the aggregate crypto market.
Yeah, so I kind of agree and disagree in the sense that, yeah, sure, I think the institutions have definitely come in the market, but if you remove US hours where ETF trading is taking place, and we're talking weekdays, the evening, or over weekends, I don't think there's a lot of institutional players trading in the market, right? So removing US hours in ETF action, I don't think there's a lot of institutional activity. But overall, I think they have definitely, picked up. I would say above 50%, between 50 and 70. Kind of hard to estimate that with certainty. But it'd be great to kind of see how they'd be trading without ETFs, right? So I think that figure would be a lot lower for sure.
Hey, Noah, aren't the institutions in there on the weekends rebalancing their books?
We're seeing the lowest percentage actually on record of weekend volume compared to weekdays, right? And since the rise of ETF trading has taken place during US hours, you're not getting a lot of trading on the weekends. That's also due to the lack of a bank, like an interledger network, like Signet over the weekend that can allow you to trade without banks being actually open. So those two reasons are the main reasons as to why volume has definitely come down over the weekend, but you're not getting a lot of volume on the weekends compared to the weekdays. And I think that's because institutions are really trading.
Yes, that's actually what's bad about the ETFs, because what's cool about crypto is it's like a new market. It's a Web3 marketplace. So I'd be more excited if it actually kept trading the same volumes on the weekends and didn't go to sleep on the weekends like the TradFi market does. But it sounds like that.
Yeah. Well, speaking of that, I think the New York Stock Exchange is now talking about having a stock market open 22 hours a day. That'd be really cool. What do you guys think about that?
Sounds like I'm not going to be sleeping.
Well, it's actually open. Like I traded in my TradFi stuff at Interactive Brokers, and they have an extended session that goes to 8 o'clock. Then they have an overnight session. If you're trading the liquid stocks, you can trade most everything overnight.
Yeah. No, you're right. I'm talking a little more open to the public without it being a little more secretive, I guess. Yeah.
And just to go back on the institutional participation with the market, I think it's like highly nuanced depending on which subsector within crypto and what you define as an institution. So if we're talking about like traditional institutions like banks, like regular hedge funds, multi-strategy funds, like I don't think that it's a material percentage of like the aggregate crypto market. If we're talking about crypto native institutions, I think that's been a growing share, and I think it fragments depending on like within the token investment landscape, which is generally the place that I'm paying the most attention to. Like institutions are not trading meme coins. Maybe some are, but generally that's not what's happening. But on tokens like Uniswap token, Uni, and other like business related tokens that are like required to do like underwriting and research for, whereas retail used to be a very dominant player in that market, I generally don't see much retail participation there anymore. It may come back, but I would say that in that perspective, there's almost no retail participation on like the DeFi or like highly technical related projects.
How much of the volume is meme coin? It sounds like it's all retail. How much of the overall volume is meme coins?
So on Ethereum, it's quite low, just because like to trade On Ethereum, the transaction cost is going to be at least like $2 to $3 fixed. And so given that like these meme coins, lower market cap, higher volatility, typically it's like not a good trading environment if you have to pay like the fixed cost. So all of the meme coin activity is generally taking place on Solana. And on Solana, it's directionally like 80% plus meme coins. So I would say Solana, the majority of the activity that's occurring is meme coins, either directly or an arbitrage that's open from one of the legs being a meme coin trade that occurs.
And it's all retail.
Yeah, there are a few like funds that have the mandate to participate. So one, for example, is called Asymmetric Capital. Like the whole fund structure is under the guise of investing in meme coins. So like there are companies like that, but it's not a material portion of the market. I would say that the way that like funds are participating in meme coins is to buy infrastructure projects. So to the point that I brought up towards the beginning of this call, like decentralized exchanges are the ones that are facilitating all the volume of this meme coin trading. And so a lot of the revenue that's being created maybe is considered lower quality because it's meme coin trading as opposed to like more tangible asset trading, but it is being driven by meme coins. So if you don't feel comfortable or don't have the mandate investing in meme coins, you may have the mandate and feel comfortable investing in an exchange that is driving the majority of its revenue from it.
Right. Interesting.
Yeah. Yeah, you're right, absolutely right. I think there's a lot of the retail market is pretty big on meme coins, but a lot of funds are getting into the game. Listen, last 24 hours, there's around $21 billion going through meme coins, which is crazy to say. There's a lot of money being flown.
In the last 24 hours?
Yes, $21 billion. So lots of money being traded there. Yeah. And as much as I used to think meme coins were kind of horrible for crypto because it kind of reduces the credibility of the industry. That was my view in like 2017 or 2018. But to be honest, I think I think people are just getting tired of like some of the VC stocks that are out there where, everyone has like somewhat of a lockup period and then start to kind of dump on people. And I think there's just a growing trend of trading these meme coins. I think there's a ton of different, utility. I think people really relate to it for like cultural reasons. It's just kind of, easy to trade. And that's definitely gained a ton of traction. So I think this year has definitely been, the year of meme coins.
Here's a personal question for you guys. We're actually thinking of coming out with a meme index for our app. I
think that makes sense. I think that makes a lot of sense because in general, people want to participate in the growth of the industry. It's not necessarily one coin in particular. And people can be a believer of, of the sector without necessarily going all in one coin. So I'd be a buyer. I think it's a great idea.
Yeah, I think it makes sense. I think the only like complexity is just rebalancing, and that you may or may not have like meme coins like Doge, which gain relevance and maintain it, as opposed to meme coins that gain relevance and lose it very quickly. And so if you're running like a market cap weighted strategy, you're probably going to like overweight tokens at their peaks and then reweight them lower.
Well, down. How we set up the index, I don't think it would be market cap dominated. I mean, it would probably be market cap limited, but I don't see it being market cap dominated. We're actually working on that right now. See if how to structure. And I think logically, it would trade better on a DEX than on a centralized exchange because a lot of the centralized exchanges may not carry the coins.
Yeah, it's only when they go through a certain volume threshold that they get added on centralized exchanges, I think. So a lot of them are indexes.
Yeah. So Solana DEX sounds like.
Yeah, like Radium, for example. Yeah, exactly.
Yeah.
I guess for our final question for today, how do you think the election result is going to impact the competitiveness and level of innovation in the country? We could start with Noah, for example.
I think innovation is likely to increase. I think that Trump is generally anti-big tech, and I would say that a lot of the innovation that's occurred over the past decade or so has been led by big tech, or at least facilitated and commercialized by big tech. And so if you believe that there is going to be some fragmentation of the big tech players into their underlying individual market segments, then the ability to compete against these players increases tremendously. So I'd say like that's a general tailwind, assuming that policy is implemented. Besides that, Trump is definitely running under, or has run under, a populist agenda. And so while I don't have like a strong opinion on the net effect of tariffs, certainly the goal with the tariffs is to create more competitiveness from domestic businesses relative to external companies. So from that perspective, it does seem like Trump is generally leading towards making things more competitive within the US, but I think it comes down to implementation of policy.
What do you think, Tim?
I think on the innovation side, all the OMF will be led by his crypto friendly stance. Crypto friendly stance, better, like, get rid of Gensler, make the regulation better. That's what'll lead to activity. I don't think it'll have any impact on big tech. Big tech is too big. They're bigger than the government. These companies are just going to keep roaring along, and that's just the way it's going to. That's the way everybody keeps saying they're going to slow down these big tech companies. It never happens. I've seen many cycles. These guys are just too powerful, and breaking them. And even if they break them up, even if they break up Google, the three companies that come out of Google will still be hugely powerful. It won't matter. So I don't believe that, but I think it's just allow the entrepreneurs and the smaller companies, smaller crypto companies to flourish. Allow them to build great things with easier regulation. Regulation is the biggest pain for small companies, right? I can definitely speak to that. So that's my view. It'll be better for crypto, but main reason, less regulation.
Yep, I agree with you guys. I think, Trump has made it very clear he wants the U.S. to become a global leader in the crypto industry. He's talking about bringing miners back in the country. I think that with clear regulations, that's definitely going to help a lot more startups, for example, start their operations in the U.S. We speak a lot of companies that are really avoiding the U.S. Some were actually trading in the U.S. and got out to prioritize Europe. In other markets, right? So I think that's definitely going to create a shift. And let's face it, U.S. is the biggest market in the world, and once they really wrap up the crypto regulations, there's no doubt that I can see them really dominating the game. It's going to take time. It's going to require a lot more regulatory clarity, but I think that this will help, and I think Trump will make it a mission to make sure the U.S. is dominant in that sector. Also, keep in mind he's got a crypto company now. Yeah, so that's very true.
He really cares at the end of the day about himself. So he's going to care about his crypto company doing well. Yep. So he's going to be getting crypto going just for that reason.
That's very true. Okay, perfect. I think that'll be all for today. I do want to kind of open the floor for you guys to see if you guys have any closing remarks or anything you guys want to say to kind of end this webinar and leave some extra insights for our viewers here. We can start with you, Tim.
I don't really have anything that I've already said. I think it's just basically we're in a bull market for crypto. That we were in a bull market before this election. Now this election is another catalyst to clean up regulation, and as you said, make the U.S. the leader in the world and everything, and they should be the leader in crypto. So now if they're going to be the leader in crypto, that's definitely going to create a lot of tailwind for anybody in the sector. And I think it should be a party. So, it should be great for WealthAgile. We can get things going and get investment and make this a big company. So, and I just like to say there's a great forum. You guys put on a great forum. Great to be here.
Thank you. How about you, Noah? Any closing remarks?
Yeah, sure. So I would just say at a high level, the election result is essentially the most optimal that could be for the crypto industry. And although we don't know exactly how things will play out over the next 4 years, it's definitely going to be better than the past 4 years under pretty much all probabilities. So just worth keeping that in mind. And yeah, appreciate you having me on the show.
Perfect. Yeah, I guess I can say thank you all for the enlightening discussion today. As we wrap up, I'd like to really, extend my gratitude to our panelists for their expert insights, and to all of you in the audience as well for engaging so thoughtfully with today's topic. There's no doubt the U.S. elections results have really laid the groundwork for what could be really transformative years to the crypto markets. Hope you guys are well positioned to take advantage of the next couple of years. If you guys have any questions, obviously reach out to Secure Digital Markets via email or on Twitter. We look forward to hosting more of these discussions, and hope you guys will join us again. Thank you once again for joining us today, and hope you guys have an amazing day. Take care.
Thanks, everybody.